we're going to talk about taxes today, and instead of just rambling on about, the tax law and what you can put on a 1040 and how you can file your return, I made up a test of our tax returns as a student. And there's a few things that I want to make known first. When you work, you're earning money, but taxes are being withheld from that. So when taxes are being withheld, the company sends those taxes to the governing agency, whether it's the federal government or the state or the local government, that gets transferred over to those agencies. Generally, the IRS has a what is called a standard deduction. And what this means is that they feel that our expenses are set during that year by IRS. They give us a value, a dollar value, and they say, well, if you earn over this amount, you have to pay taxes and you have to file a return. If you earn under this amount, you still have to pay taxes, but because you haven't earned more than that standard deduction, you don't have to file a return. Sometimes that's a little misleading because students in particular should file to receive their federal tax back, because 9 times out of 10, they fall into a category because they're full-time students. They're not in the profession that they are studying for. So the jobs they usually have are part-time, and they aren't working a full 40-hour a work week. So taxes are being withheld, but the wages earned are low enough that you could probably file, or you should file, just to get your return. And that's the case we have here in this example. So here, can everyone see this? This is a W-2.
Yes.
Okay, good. This is a W-2 that our student here, the student's name is Cougar Test, and she is working, or he is working, for Columbus State. And for 2020, this student earned $10,000, and $1,500 was withheld for federal taxes. So that went to IRS, okay? The other thing that's important is if we go to the 1098 form, we can see, good, that Cougar Test paid tuition during the year. Okay, and this form says 2021, but it's really for 2020. So the payment received for tuition by Columbus State from Cougar Test was $8,000. It was a full year tuition plus some. So those are the expenses that were incurred. The important thing to know on this form is that box 8, check if at least a half-time student, that has to be checked so that we can now apply for an education credit. And I'll explain what this is in a minute. Is anybody familiar with this 1098 form, this 1098T form?
Yeah, I knew that was out there, yeah.
Good, good. Yes, if you're a student at Columbus State or any college, you should get this 1098T form. If you do not receive it, there have been incidences where some colleges didn't record this properly. Students didn't receive this, and some of those colleges are now closed. So we're going to use this plus the W-2 when we file the return for this student. Okay, so back to the Cougar Test return, which I think is the first file, and page 6. Okay, this is the 1040. And we fill out our name and the address, and we also fill out that we are going to file single, meaning that I am the only person I am responsible for. I am not married. I do not have any dependents. Okay, so I'm only filing for myself. Married filing jointly should be for those individuals who are married, and they'll file a joint return. They'll combine all of their income together on one return. Married filing separately means that the two married individuals will file as though they're single. For reasons that we won't go into now, but basically it's some financial reasons for people to do that. It's more advantageous, or it's protecting one taxpayer versus another. Again, some legalese that we really don't have to go into right now, but just know that that's an option. The other one, head of household. Head of household is for someone who is unmarried but has dependents. They have to take care of someone, either a relative, a sibling, okay? And we can file as head of household, which gives us a better tax advantage because we have dependents, even though we're single, okay? We can file with a little bit more of an impact than just a single filer. A qualifying widower is someone who has a spouse who has deceased and there are still children or dependents at home that they're caring for. Okay, that's equivalent to married filing jointly. And the reason why there are these different levels of tax filing statuses is because there are different tax rates. Okay, there's a benefit to being married and filing jointly. There's a benefit of a qualifying widower, and there's an extra benefit for head of household. Again, because there are dependents involved, the taxes are a bit more favorable to those categories. Okay, questions? Okay, so if we go down a little bit in the middle of this page, we see that it is asking for our income. So this first section is our income for what we've earned. So the W-2 that we just saw recently had $10,000. So I'm going to put this here because it's a W-2. Okay. There is no other income. However, if the person or the student rather had any interest, we would also include that here, taxable interest, and I would put that on 2B. And if they had any dividends, if they had some stock or some other investments, there might be dividends involved, taxable as well, so that would go in here. There are other pension and Social Security benefits that could be taxable, but they have to go through. We have to look at the information and kind of review to see if it's taxable. 9 times out of 10, depending on what the number is in line 1, some Social Security benefits will be taxable. Okay, pensions and annuities too, same thing, right? Capital gains means that if you sold an investment that was purchased in a prior year, you might have a gain or a loss, so we have to record that on this line 7 as well. Okay. Okay, so if we go down a little bit further, what we're doing is we're adding up all our income on line 9, and then we look at some adjustments to income. The adjustments to income are things like charitable contributions, and the government this year states that we can deduct $300 on our tax return, even if we do not have any other deductions. And I'll explain what I mean by that in just 1 second. That would be minus from our $10,000, and we would come up with a new amount on line 11, which would be less than the $10,000. The standard deduction for single is $12,400. That's the level that IRS says if you do not make more than $12,400 as a single person, you do not have to file your tax return. However, this person had federal income taxes withheld, so we want to get that back for the individual. Okay. The $300 that I mentioned up here for charitable contributions refer to a deduction that a taxpayer can calculate. It's called an itemized deduction. So the government says you can either take the standard deduction, which in this case is $12,400, or if you have other deductions greater than $12,400, you can use that amount. Itemized deductions encompass medical insurance, medical expenses that insurance did not cover, real estate taxes, state income taxes, mortgage interest, any employee work-related expenses like buying clothing, specific clothing because you're in a position at a company where you have to wear clothing that you would normally not wear outside of work. So all of those add up, and if they come to more than $12,400 for this single individual, we would use that amount here. And the reason we would look at that both ways, the standard or this itemized number, is because it reduces the line 11, which is our adjusted gross income. Okay, so that's our W-2 earnings at this point in time because there are no other adjustments. I know that my standard deduction is $12,004. And what that means is since my standard deduction is higher than my wages that I've actually earned, my taxable income, if you can see on line 15, is zero, meaning that I don't owe the government any money because my taxable income is zero. So they can't tax zero, okay? So I get all my money back, and we'll get into that in a little bit. If my itemized deductions were $12,401, I would still use that. Okay, if it's higher than 12,004, this number would be in line 12. Okay, but at this point in time, this single individual only has the standard deduction. There aren't enough deductions to claim. The $300 that I explained in line 10B, regardless of whether you itemize or use a standard deduction, the government this year says you can deduct up to $300 of your charitable contributions, regardless of whether you itemize or use the standard deduction. So if my income here was $14,000 and I gave $300 to my church, my adjusted gross income, line 11, would be the difference between my $14,000 and the contribution. Okay, and then I would take my standard deduction on top of that. So my taxable income would be a very low amount, like probably $2,000 or so. Does that make sense? Questions?
Yeah, it makes sense.
Okay. All right, so let me see. We're going to go to page 2. Okay, so the next page, if we scroll down to the next page. Okay, so here my tax on zero is zero, so it comes down to line 24. My tax that I have to pay the government is zero. However, on my Form W-2, I had $1,500 withheld. So if we go back and look at the W-2, which is on page 3 here of this, we would see the $1,500 was withheld. So I put that in line 25A and add it to any other taxes that were withheld that I paid, and I come up with a total in 25D of $1,500. Okay, so if nothing else happened, and we'll ignore this line 29 for now, my total tax is $1,500 that I paid in, but my tax liability is zero, so I would get that entire $1,500 back. Okay. There's one other thing that we have to look at, and that is the education credit. Okay, and we are going to go to page 9 of this form. So if we just scroll down to page 9. Okay, this is the education credit. Now, there are 2 types of credit, because you can see it says American Opportunity and Lifetime Learning Credit. Normally, if you are in a program toward a 4-year degree, you are going to use the American Opportunity Credit. If you are an adult going back to school to learn some new skills for retooling your skills to be better employable, that's the Lifetime Learning Credit, okay? And even after you've earned your degree and you go back to school to maybe learn some new technology for your job, you will still be eligible for the Lifetime Learning Credit, okay? There's a maximum on that. We won't go into that very much, but we'll see here the American Opportunity Credit has the same limitations. So here, in this form, we have line 1 is 2,500. That's the maximum amount that can be earned for a student. But it's reduced because if you're filing married, filing jointly, you can get a different amount. And what this does is it looks at the wages of a particular person and looks at what is it that we should be refunding to this individual. So here, if you're earning $10,000 as a single person, that gets entered on line 5. And what this is doing is really just checking the limitation of the earnings of the tax filer. Okay, so the maximum limits are 10,000 for single, 20,000 married filing jointly, and also 10,000 for head of household or qualifying widower. Then we take that 10,000 and just compare it and make sure that, yeah, everything is fine with this taxpayer, so they do get some sort of credit. We look at this ratio, which is taking a ratio of the wages and the limitations, and that's where this 1.000 is. Okay, again, it's an IRS calculation. So we look at the 2,500 in line 1, multiply it by 1, and we're going to get 2,500. However, because of the limitations for each year, the refundable American Opportunity Credit is $1,000 for this individual. Okay, the non-refundable credit is $1,500. Okay, so the top part is the refundable. Refundable credit in IRS language means that I didn't do anything to earn this money. It's a refundable credit to me. I will get it regardless of what my wages are. So it tacks it on to any refund I would get. Or the flip side of that, if I owed taxes to the government, it will reduce my tax liability. Okay, so $1,000 in this case is a refundable credit for this student. The non-refundable credit is the offset. So again, remember, every year we are allowed this $2,500, okay, which is here on line 7. So if I go down a little bit further, this $1,500 then is just the difference. So I'm getting a benefit for the entire $2,500. It's just that $1,000 is going to be in my pocket. The $1,500 is non-refundable. It lowers the liability if I had a liability. In this case, the student has 0 liability, so it's not offsetting anything but I'm still getting that $1,000 refund, and that $1,000 refundable credit, and we'll see that in a second when we go to the when we go back to the tax return. Okay, questions on this form? It's a little tricky to fill it in, but these numbers 2 through 5, line 2 through 5, are generally filled in for you if you're using a piece of software. If not, it's stated here in the line item detail. Okay, so 90,000 for the single, and then 10,000 for the single, which was the W-2 earnings. So it says, okay, 80,000 is if I earned more than 80,000, I can't take the credit. Okay, so in this case we can, so it's not an issue. Okay, so if we go back then to page 7, okay, we'll see that on line 29, the $1,000 is added as a refundable credit. Okay. So I add the $1,000 to the $1,500, and now my tax refund, okay, or my total payments that IRS is recognizing is $2,500. Remember, I only had $1,500 withheld too, but now with this refundable credit, it acts as though I actually paid IRS an additional $1,000, which means I will get that back, because in this case, line 24, the tax is 0. I paid in $2,500. I overpaid IRS $2,500. Okay, so if we scroll down just a tiny bit, okay, we will see that my total payments in line 33, $2,500. I overpaid $2,500 because my tax liability was 0. I will get that as either a check from IRS or have it deposited into my account by indicating in line 35B and C and D, where is it that I want them to deposit this money? Okay. Questions?
You did say something about software. What would you suggest for like tax software to use?
It's each one of them every year, because the tax law changes constantly. Some of them will have glitches. TurboTax generally usually jumps on those glitches right away and corrects them. There's also in IRS's website, there is a free file that you can also use, and I believe that that's TaxSlayer. But generally, if I was going out to buy a piece of software, I probably would use TurboTax. I've used it in the past, and right now I'm working in the VITA program, which is the Voluntary Income Tax Assistance, and they use TaxSlayer. So either one is fine.
Okay.
Going to IRS's website or just using TurboTax. And since we're on the subject of tax preparation, VITA or IRS has this program called VITA, and you can call them and have your income taxes done free of charge. It's virtual. Okay. And all you have to do is dial 211, which is Hands on Columbus. They will make an appointment for you. Wherever you live, there's probably a location close enough, and you can have your taxes virtually completed. Okay. Columbus State is doing this also. We've been doing it for a few years. So if you call and say you want your taxes completed by Columbus State, they can help you and say, yes, okay, here's the next appointment. But I would, if I was doing this as a taxpayer, I would probably take the first appointment wherever it was, because they're mostly virtual. There's only one location that is in person, and you can do that too. But if you feel that you don't want to be in person anywhere yet, because of the pandemic, there's plenty of virtual items or virtual locations, and the tax forms, they will help you to upload them, and it's very secure because, again, we are working in the IRS website, the umbrella of the IRS, so it's pretty secure. And this is probably about the sixth year that we've been doing this, and it is very secure, I must say.
I did have a question. I'm an older student, and our children are older, and we don't really have the deductions for a house and all that. We usually pay for our preparation, but it seems to be going up money-wise every year. So that's why I was wondering. I've never used the tax software. I used to do taxes years ago, but then it got so complicated I couldn't do them myself. So that's why I'm asking.
Yeah, I would, if I were you, I would probably call VITA, and the thing about VITA is they have a tax or a taxable wage or a wage cap. So if someone's making $100,000, they cannot use the VITA program or the VITA services. I forget what income level is. Last year, I think it was about 55 to 60,000. As Columbus State, between you and me, and hopefully it'll only stay here, even though this is being recorded. I never turned anyone away, especially our students and our staff. So I would do them all the time. Okay. Yeah.
So Columbus State has this, too. Okay.
Yes, and it's virtual because obviously we can't be on campus. So so Hands On Columbus is uploading the information that. And again, if for some reason they don't see an appointment for Columbus State, they will put you where the next appointment is, as long as you want to go virtual and do it that way. So and believe me, all of these people are very, 9 times out of 10, they have corporate experience, or they were tax professionals in their prior lives before they probably just did this volunteer work. So they're all very, very good, very knowledgeable. They know the tax law, inside and out.
So this is Columbus State, you're saying, or the VITA? Okay.
The VITA program. It's a VITA program of Central Ohio has different locations all throughout Central Ohio and the outlying areas like Westerville, or I think there's one in Upper Arlington, Dublin. But they're all under the auspices of this VITA program, and they do it for free.
Okay.
Yeah. The reason I said, Columbus State is because I don't turn anyone away. They will probably ask you for your income, and if it's over a certain amount, they will tell you that you're out of scope and they can't do your income taxes. The other thing is, if you have a lot of businesses or a lot of different types of tax situations, that might be out of scope for us also. Okay.
We aren't very complicated, but yeah, I'm just kind of looking out there right now. I don't know if we'll still go with our people or not, but we'll see.
Yeah. And like I said, TurboTax, it's not, it's probably one of the best. So again, if I was going to buy a tax software, more than likely it probably would be TurboTax.
Okay. Sounds good.
Other questions? Any tax questions I might have maybe didn't respond to or bring up? I'll try to answer those.
I just have a quick question since we have a lot of students who are going to be viewing this. Does any of what you're going through change if, say, they're at an age where their parents can claim them as a dependent?
Oh, good point. Thank you. I meant to mention that. Yes. What will happen is, and if we bring up my third file, 2020 instructions. Okay, if we can go down a little bit. What will happen is, if you are still at home, page 65, up a little bit. Go to the $10,000 range. Yeah. Okay, there you go. If we are still at home and the student is a dependent of the parents, what will happen is the $12,400 goes away on that tax return, so that now the taxable income would be $10,000 because the parents are getting that on their tax return. Okay, they're taking that student as a dependent, so the parents' income tax will be lower because they have that additional dependent. So me as a student, I still live at home. My parents take care of everything for me. I do pay my own tuition, so they will, so they don't claim the 1098 information. That's strictly mine. But what happens is then my tax here would be, this first column is single. So the tax liability would be $1,006. Okay, that would be my tax liability. But remember, there's that non-refundable credit of $1,500. So my tax liability then still is zero. Okay, it's just that my reporting now is going to be different because I'm not claiming myself as a dependent. My parents are. Did that make sense?
Yes, thank you.
Okay. Yeah, so pretty much what would happen is the refund would probably be the same. Okay, but the parents get that benefit later on in their tax return. Yeah, thank you. I meant to mention that when I was going through. Okay. Other questions? Sometimes this seems overwhelming, but don't let it frighten you at all, or don't let it don't feel overwhelmed by the taxes. Always ask questions about what you should do, and again, you can call 211 to make an appointment with FIDA. And I don't mean to plug it, it's just that a lot of people don't know the services out there. And you're right, you pay, it used to be $250 flat amount for just the 2 pages that you saw that I showed you on the 1040. And yeah, it has increased. It has increased because, the tax, everybody's saying that you really don't have to file your taxes, and, in effect, you really do, but you shouldn't have to pay an exorbitant amount of money to get your taxes done. And that's why there's this.
Yeah, H&R Block's expensive. We stopped them years ago, and then we found like a more of a local, and it's like half the price, but still it's over $100, and our taxes aren't that complicated right now.
And that's right. And that's the good thing about this program, because you get more of a refund. You don't have to pay anything out. And when you get more of a refund, that money gets spent in the neighborhood and the community, and it's a win-win for everybody. So yeah. H&R Block, I would never use their software. So yeah, so because I think there is something out there for them. I think it might be an online thing too, but yeah. So good. Yeah. And a private tax preparer generally would be a little bit higher too. So you just have to be careful and, try to use these services.
Yeah.
Good. Other questions? Okay. Well, if there aren't any, again, if you have some, let's see, is there a, yes, Kakashin, I'm sorry, I hope I'm not mispronouncing your name. You had your hand raised. Do you have a question? I'm not hearing you. If you have a question, I'm sorry. Let's see.
Oh, I'm so sorry. There was somebody at the door and I just had to run to get that. So I apologize. I had to come in late. So I'm a American citizen who resides outside of the US. So I have like a few questions, like how does it work for someone like me? I don't work, but I would eventually like to know how does it work in terms of taxation and stuff like that.
Well, you're an American citizen?
Mm-hmm.
Yes. Then wherever you earn those dollars, you must report them regardless of where they're earned. And they are taxed at the same, okay? And depending on the situation, you could get a credit if you're paying taxes to another country.
Okay.
Okay, so it's like a the government allows you, recognizes some of the credit that you've paid or the credit that you've received from another country, but that depends on the country, the circumstances, so it gets a little bit involved. But generally, regardless of where you earn your income, if you are an American citizen, you have to still file your 1040 every year. Okay.
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 Yeah, I have a few more questions, but I think I'll probably talk to you later about them.
Okay, let me see. Let me, I will put my email address. Let me see.
Yeah, that's actually perfect. Thank you so much for that.
Yeah, tstolte@cscc.edu.
Thank you so much.
Yeah, you're welcome. Yeah, anybody, please, I know sometimes when you first see this information, it gets a little bit daunting, but you can send me an email after, or if you have questions later on, please feel free to send me an email and I'll try to help you out.